Hello, everyone, and welcome to the latest edition of the Sharesify podcast. I'm James Crux, and I'm joined by my colleagues Stephen Frazer and Ian Conway. Hi, gents. Are we well?
Yeah, not bad.
Very well, thanks, James.
Excellent. Good to hear. Good to hear. So, another eventful week for markets, and as we kind of sit now, the FTSE's up 1.8% on the week. The more domestically oriented FTSE 250 is flat. European stocks are continuing their winning streak, but I suppose all the big actions across the pond, where the S&P 500 and the Nasdaq are just about green after a volatile week, but one dominated by results from chips champ Nvidia.
Yeah,
Blowout numbers, but the reaction was a bit of a curious one, a bit of a
it's
damp squib.
yeah. I mean, it really is surprising, and I mean the headline of the piece I wrote is analysts left bemused. I mean, one analyst made the point of saying, "Well, what else do investors expect the company to do?" And it blasts past the figures with its trading update, and it raises guidance significantly as well. I've made the point that, I mean, you're looking at a PE of around 25 on a rolling 12-month basis. Now, that will seem high in traditional metrics, but this is really low compared to its kind of average over the last sort of 5 years or so. So it's not even really as if we've been talking about PE compression. So it can leave you kind of head scratching. But I suppose, this whole AI issue is just leaving a lot of investors just a bit cautious and not quite sure about how far they should chase this spending theme and what kind of sustainability there is.
Excellent. And what's grabbed you, Ian?
Oh, there's been a few things, James. I mean, London Stock Exchange Group, obviously all eyes are on that, with Elliott Management trying to pressure them to shake the business up. Looks like they've bought themselves some time, I have to say, with raised guidance of £3 billion buyback. Now, Elliott were rumoured to want a £5 billion buyback, but it's worked. The stock is up 11% on the week. It went up 9% on the day of the results. So I
Yeah,
think they're in the clear for the time being.
I
David
think, Ian,
Schwimmer can.
one thing that stands out to me is that it does seem that they're not being antagonists. Elliot don't come across as they're going in there banging a stick and saying, "We expect you to do this and do that." They seem to be going in there with a sort of a helping hand kind of attitude, which is always a better way to do it. If they can work with management and come to relative agreements about how to drive value for shareholders going forward, that's a better way. So fingers crossed, it should work out positively.
Well, it's interesting. David Schwimmer was on Bloomberg TV and he said, "Oh, yeah, the door's always open. We'll talk to lots of people." And he did refer to people who had a short-term outlook and who liked financial engineering. So, without saying any more, what else has been? Well, we've had poor results from Flutter and Hikma, two big FTSE 100 companies. Actually, not so much the results, but what did we say earlier in the week? The outlooks. It's the
Yeah,
outlooks again that are disappointed.
yeah,
The one that I find most interesting is WPP, because new CEO has come in, kitchen sinked
yeah.
the costs and the
And
restructuring.
not for the
But
first time, I think.
no, but has a new plan to simplify the group into four
Yeah,
divisions. Now, the shares went down 10% initially, right? That's almost it was a 29-year low. And they closed up 4% on the day. Now, if you're into your technicals and your Japanese candlestick charts, that's called a hammer. The thing is, it's down today. It's down 7%. Does depend where it closes, but technical guys will be watching this, and value guys will be watching this to see where it closes. If it doesn't wipe out yesterday's gain, it's quite bullish. That's not a recommendation. It's
yeah.
purely an observation.
Yeah.
Um, but we
I
put a
mean, I
note
have to
out.
say, it's a company that's been in trouble for such a long time now, hasn't it? I mean,
It
pretty
has.
much, it doesn't really seem to have captured any of the heyday of Martin Sorrell, and um, I think it's my observation as an outsider is that it just doesn't seem to have quite captured its place in the new internet world of advertising. So the idea of advertising via social media networks, advertising via internet, websites, and so on, and it just doesn't quite seem to have grasped that kind of new digital dynamic as well as it might have done.
I think the new CEO clearly has a plan. And bear in mind that go back to November, there was a lot of talk about bids for WPP because the business was just, so cheap, and it just got cheaper and cheaper. Um, Interestingly, we've just put out a note on the top 10 most shorted UK and US stocks, and no surprise, WPP was on the list. So I
Yeah,
think that may be one of the reasons it bounced. And Steve, you've just put a note out on Dell, which is indicated up double digits after results.
Yeah.
That's on the list of top 10 US most shorted stocks.
Yeah, absolutely. And there are other really interesting ones on that list as well. Broadcom, I think, is on that list as well. And talking of Broadcom, I mean, it's that AI infrastructure. Dell very much in the servers business. It's being pressured to some degree at the moment because memory chip pricing, we talked about this before, memory chip pricing is very tight. In the piece, I flag up another piece I've written about Samsung, and that really explains about how memory chip pricing has changed in recent times. That's going to be a headwind, no doubt about it. But what was interesting is that Dell has said it's been able to pass on a lot of that price rise cost to customers through two price rises, one in December and one in January this year. So let's see over the Q1 of the new financial year how that plays out. But it's been absolutely outstanding business. And when you think about the trillions of dollars that seem to be being ploughed into AI infrastructure and data centers and so on, Dell looks a pretty well pitched price business to capture some of this. And it's on a PE of about 10, 15 times, 12, I think, something like that. It's not expensive, even relative to old-fashioned traditional metrics.
Yeah. So, James, what's been grabbing you this week?
Well, there's more action in the investment, or the increasingly small investment trust sector with Impact's environmental markets. Looks like it's going to be the next one to go, having triggered the exit tender offer. So, Boaz Weinstein's been at it again, and it looks like investors are going to lose another option with the sort of last standing environmental trust.
Yeah.
So, the shareholders can get out NAV minus costs, but it's a bit of a shame. That's another option that's, that's going for a Burton, as they say.
Yeah. Is it pricing it as at NAV? So it's just going to close the discount.
I believe so. That's right, isn't it, Ian?
Yeah, I believe so, James. Yeah, that's a blow to Impact because they've got a great track record as real specialist investors.
Yeah.
In that space.
Yeah, and the AIC has called on Saba to respect other shareholders' wishes, and it's another development in the sector. Next week,
reminds me. I mean, recently. Sorry, James. It reminds me recently we had a similar situation with Herald Investment Trust, the Katie Potts technology, very much small cap UK technology stuff. But they also had a tender offer, realistically asking, I suppose, investors, do you still back us, or do you want to get your money out and go off? And I think it's a salient question. And this goes to the bigger question, I think, that investors need to be asking about, should investment trusts be investment trusts if they're really only investing in liquid listeds, or should they be thinking about going down the open-ended fund route? And that's a question that's really been raised by Smiths and what it's doing. So I think I'm going to put a poll out on our Sharesify X account and see what kind of feedback we get, because I really think listeners and general retail investors will have a strong view about whether they want to invest in investment trusts or in OICs, depending on what kind of assets the fund invests in.
Absolutely. Yeah. And next week, just to point out, we've got results from JGGI, which is a very popular trust, and also Law Debenture, which is this very interesting UK equity income fund with a twist, a kind of professional services business that adds support to the dividend.
Yeah, so I've found it fascinating because I remember reading your stuff a while back, James, a long time ago now, and it has got a twist. And I wonder if it might be a really good opportunity for Law Debenture to come on the podcast and just explain why they're different, what makes them stand out from almost any other investment trust around. Next week is going to be busy for results, though, isn't it?
It is indeed. Yeah, there's a lot of US retail actions. We've got Costco, Best Buy, the Gap, and also Ross Stores, which is a kind of discounter. Dress for less is its motto. So that'll give us a good read on the US consumer.
Yeah.
Anything you've got your eye on, Ian?
Well, funnily enough, James, talking of consumers, Greggs is out next week, and no spoilers, but it is the most shorted UK stock.
Right.
And the number of shorts has gone up, and the percentage of shorts has gone up. So if WPP is any guide, it could be very interesting to see what happens with that stock when that reports next week. Domino's is out as well. That used to be on the most shorted list. Funding Circle, not a short, and one that we mentioned in your small cap report on how to buy small cap companies because it's a small non-bank lender. And we got the house builders back, Taylor Wimpey and Vistry. So we'll see what they say. What about you, Steve?
And interesting, across the pond, there'll be CrowdStrike as well, big cybersecurity company that gets a lot of attention. And in the context that we recently had results from Palo Alto, which is a bit of a bellwether of the industry, it was exactly all that point you've been making in for a few weeks now about brilliant results, but the guidance was seen as soft and the shares got pummeled about 7%. So really interesting to see what CrowdStrike says. And then Broadcom right at the heart of that AI infrastructure theme. So will it be a bit of a washout like Nvidia, blowout numbers maybe, but the market's going to go, nah.
Well, I think that's about it, isn't it, Steve? Might as well wrap it up there.
I think that's pretty much a wrap. Yeah, absolutely. I mean, get in touch with us at editorial@sharesify.com. Reach out to us with any points you want to make, any discussion points you think we should be covering, and we're not. Go into our X account. I'll have a poll up there quite soon about this OIC and I investment trust dynamic. It'd be really great as well if you'd send in your thoughts, give us a bit more context to just yes, I prefer ITs, or yes, I prefer OICs. Just give some context. Again, send everything to editorial@sharesify.com. Click our YouTube like and subscribe to the channel if you dare to, and that's about it. So from us, have a good weekend and see you next week. Take care, guys.
Good weekend.